What if I told you there's a simple timing trick when you buy a home that could give you up to 2 months with no mortgage payment? No gimmicks, no loopholes, just understanding how your closing date actually works. The best part? Most buyers have no idea that this even exists. Stick around because I'll show you exactly how to time your closing day to get that breathing room. And then I'll share a bonus tip that could cut 5 years off your mortgage and save you $100,000 in interest. Now here's the part that most buyers never realize. Let's say you close at the end of the month, October 31st. Your first mortgage payment will be due December 1st. They don't bill you right away. But if you wait just one day and you close in the beginning of November, your first payment isn't due until January. 1 extra day's difference is 1 extra month with no payment. It's not a loophole and it's not a delay tactic. It's just how the loan system works. When you take out a 30-year mortgage, you're signing up for 360 monthly payments. That's it. After you close, your lender needs time to process the loan, set up your account, and get everything in place before billing even begins. That processing window means your first payment typically doesn't start for 30 to 60 days, and knowing how to time your closing can buy you a little financial breathing room right when you need it the most. Now you might be wondering, if that's true, why do so many people still close at the end of the month? Historically, mortgage companies used to calculate interest on a monthly basis. You might remember those old amortization tables printed out month by month showing every payment breakdown. Back then, closing at the end of the month meant less prepaid interest, due at closing, and an easy start on the first of the next month. But today, things have changed. Technology is a little more complicated. Lenders now calculate interest daily, per diem, not monthly, which means there's really no financial reason you have to close at the end of the month anymore, unless your move-out date or rental lease requires it. In fact, closing mid-month can actually be smoother since title companies, attorneys, and lenders aren't slammed with end-of-the-month chaos. Here's something else buyers don't expect. After closing, your mortgage might get sold. It most likely will, and sometimes right away. Don't panic. Your rate and terms stay exactly the same. Another company just takes over servicing your loan, and you'll get a notice letting you know where to send the payments. It's completely normal and can happen even a few times over the life of your mortgage. So you might close with one company, and then you'll get a letter that says now a bigger bank is servicing your loan. Once again, totally normal. And here's a quick win for sellers. If you close before your next mortgage payment is due, let's say the 15th of the month is the grace period, you won't owe that payment at all. You get to keep that in your pocket as a little bonus for next month. You don't want to make a late payment after the 15th, but if you close from the beginning of the month until that date, it's just easier not to pay it. It won't be on the settlement statement. And since we're talking about smart money moves, here's one more. Make 1 extra mortgage payment every year and apply it directly towards your principal. On a $500,000 loan at 6%, that simple extra payment can shave off more than 5 years and save roughly $118,000 in interest. 1 extra payment a year, so maybe an extra $100 a month, $200 a month, and you are 5 years closer to being mortgage-free. So remember, your closing date isn't just a random date on paper, it's real strategy. Time it right, and you could start your first month's mortgage payments up to 2 months later. And sellers, you can pocket an extra month. And if you just make 1 extra payment a year, just on principal, you will save 6 figures over time. If you thought this was helpful, hit like and subscribe, and I will love to share with you all the secret looks at the real estate world. And if you're buying or selling in Illinois or Wisconsin, just ask Jamie.